Yeah, please carry on.
Yeah.
Yeah, Vineet, you can continue.
Yeah, so we are a 30-plus-year-old firm, and I've been with this firm since 2009 as head of research. And our approach to equity is to identify stocks which have got either a value play concept or is a growth stock which can give us doubling of money in 3 years typically. So we look at 30% CAGR return stocks. So we believe that your company is positioned very well in the stationery space, and with the sector now, with schools ramping up and post COVID and all, I think there's a very good opportunity out here. That is our view, and we would like to hear from you your view on the market, your business, and your strategy to grow the business.
Certainly.
Yeah.
So first of all, nice to meet all of you, Jamit and Vineet. So definitely about the industry, I must tell you that it's quite a fragmented industry, and the entry barrier is also low. So it's definitely as I said, it's quite fragmented industry. And if you look at our last 10 years CAGR, it is not really very impressive. But from since 1920, you would see that 1920 was our best year in last 10 years. And the momentum could have been we could have carried the same momentum if there was no COVID. This year, of course, the last year, the last 2 years have been affected by COVID, but since the schools have reopened, from February and March, this quarter is going to be one of our best quarters in last couple of years. In terms of revenue, in terms of profitability, I'm still not sure because, as you know, the raw material prices have really shot up in a very short time, due to ongoing situation. So I think it may take a while to for the raw material prices to stabilize, but nevertheless we are quite optimistic going forward. So as I mentioned about revenues, that the last 10 years have been really very subdued for us, but I believe that sometimes a company needs a breakthrough product to really bounce back.
Yeah.
So in 1819 we launched Pentonic, our product Pentonic, which I would say was a breakthrough product. And so you can see the full benefit of Pentonic in the 1920 results. And similarly, the momentum for Pentonic is still the same, except the lockdown period. So going forward, we believe that in 5 years' time, that is the minimum period we are looking at. That is the maximum period we are looking at to double our turnover from the pre-COVID level, which was 400 crores. So we are aiming at the minimum turnover of 800 crores in 5 years' time, which is like a 15% CAGR. So that's the minimum which we are looking at with the help of our breakthrough product. And in Pentonic, we have added more products. So now Pentonic is a kind of a separate brand for us, which initially was a separate product, but now it's a separate brand for us. And we have a good portfolio, Pentonic portfolio. where we have 3-4 products, and we are launching another product very soon. So, so the growth levers, I would say, would be definitely. So Pentonic is kind of a, you can call it a premiumization. Until Pentonic was born, our revenue was largely from below 10 rupee products, whereas after Pentonic, our the share of above 10 rupee or 10 rupees and above products has considerably increased. So that is one of the growth levers which we are going to have. Second is reach extension. So I'd like to explain to you. Have you heard of Vector Consulting?
I've heard of Vector Consulting. Yeah.
Yeah.
So these are the guys, I think, who are helping one of the innovative brands do marketing based on their pin codes.
Yes. So they're currently in Calcutta. They have.
Yeah.
They are working with Dollar Hosiari.
Yes, Dollar. That's what I meant.
Yeah. They are working with Century Ply.
Yeah.
They are working with the Skipper Pipes.
Yeah.
And they are working with Link Pens. So these are the 4 accounts they are having in Kolkata. Apart from, they may have other accounts in Bombay, other places. Of course, so they have the credentials of working with top companies in India. Even Bajaj Electricals, they work with them.
Yeah.
So so we are working with them since December 19.
Okay.
Yeah. So that was just pre-COVID, we started working with them pre-COVID.
Yeah.
And so the project which we are working with them is called Reach and Range Expansion.
Okay.
So the idea is that, in India, there are about 150,000 stationery outlets.
Okay.
Out of which we are already reaching about 100,000 outlets.
Okay.
So the remaining 50,000, which are smaller outlets, we are yet to reach.
Okay.
But apart from that, there are more than 10 million non-stationary outlets. So which are potentially, you can call them, they have a potential to sell pens also.
Yeah.
So these are like general stores, kirana stores, Pan Plus outlets. So some of them are already selling pens, may not be Link pens, but they are selling the other pens, mostly the cheap ones. And so our target is that at least if we can begin with 5% of these outlets. So that is like 5 lakh outlets, 500,000 outlets. So we are targeting these outlets, and we have already enrolled about 100,000 outlets. Of the non-stationary outlets.
Okay.
So when we say enrolled 100,000 outlets, it means that we have sold them minimum 50 Pentonic pens.
Okay.
So
okay.
So in the process, of course, it is also not an easy task, because the productivity rate is about 20 to 30% only. So in the process, we may have touched at least 300 to 400,000 outlets, to enroll 100,000 outlets.
Okay.
So this is something which we are really, banking upon. I mean, and we believe that to enroll, so our first step is that how soon can we enroll these 500,000 non-stationary outlets?
Yeah.
So our growth lever, the second growth lever is of course the reach expansion, as I mentioned.
Okay.
reaching to these non-stationary outlets
Okay.
as well. Of course, yeah, the remaining 50,000 stationary outlets we have to reach. But apart from that, these 500,000 non-stationary outlets.
Uh, yeah. Yeah.
So yeah, and of course, currently, as you know that, as you may be knowing that our major revenue, I would say between 90 to 95% revenue is coming from writing instruments only.
Yeah.
But stationery is a large industry, and so we tied up just before COVID. We tied up with a brand called Delhi, DELI.
Okay.
The company is from China, but it's a $3 billion revenue company,
Okay.
and Delhi products are available in more than 100 countries.
Okay.
So they have a large range of stationery products,
Mhm.
and we tied up with them to distribute Delhi products in India.
Yeah.
So this is another. So you can call it a expansion into stationery range,
Yeah. Yeah.
and
Yeah.
so this is also going to add value to our portfolio.
Okay.
So I would say these are the three growth levers.
So one is
which we-
Pentonic, the other is growing the reach, and third is these stationery products.
stationery,
Yeah.
right? Yeah. Yeah, so this is more or less to just a summary of what.
Yes. Yes.
Yeah, but if you have any questions, I would like
Yeah.
to
Yeah.
answer.
So
to
if we do a deep dive, so have you ever analyzed why you had a static? So this opportunity was always there for us. What you have highlighted. And
Yeah.
over the last decade, if you could call it a lost decade for us,
Yeah.
uh, why do you think, we could not make a lot of, get the growth
Headway.
mojo with us?
Right. So you're absolutely right. It's not that we never tried to. So I will call Pentonic a product which is quite differentiated than the competition,
Okay.
and that's why we call it a breakthrough product.
Yeah.
So it's not that in the past we did not try to develop products which could be breakthrough products.
Yeah.
But we developed two products in last 10 years, but they did not really work for us.
Yeah.
After the initial a good launch, we did
Yeah.
not get really a good repeat.
Okay.
So we tried our bit to develop, so the history of or legacy of Link Pens is that we try to do things differently and not follow the competition.
Yeah.
So that was one. So of course, yeah. So one of the challenges in our industry is
Yeah.
there are these 5 rupees and 10 rupees and 20 rupees are really very strong price points.
Yeah.
So, you won't believe that for last 20 years, we
Yeah.
have been selling some products which
Yeah.
we were selling at 5 rupees, and until recently, they were still at 5 rupees.
Wow.
So when we launched them, more than 10 years back or 15 years back, we had, quite a handsome margin for those products.
Right.
But unfortunately, the prices could not be, the cost increase could not
Yeah.
be passed on. So we were really struggling to come out of this and develop products, where we could have reasonable, gross margins for us. So yeah, we lost 10 years definitely, but finally in 1819 this happened, and so that's why we call it a breakthrough product, and we are able to build up on this Pentonic brand, And this is a 10 rupee product. The Pentonic initial product is a 10 rupee product, and today we have a 20 rupee product in Pentonic, which is also doing well. And we are going to launch another pen, which is going to be a 30 rupee product.
Okay.
So basically, we are trying to come out of this below 10 rupee.
Yeah, the
you
mold.
know, yeah.
So, that's a, so, the previous product launch that you had done, what was the competition like then? I'm sorry, I'm delving into the past, but, we would like to understand the business more.
Okay, so typically I would say, what happens in FMCG,
Mhm.
or I would say in our industry as well as FMCG, that how a new product is typically developed, I would say.
Yeah.
Not always, but how it is typically developed. So in our industry, let's say if a link pen is doing very well,
Mhm.
and so what does the competition do is, oh, link का ये pen बहुत चलता है, so let's try to develop a similar product.
Mhm.
And so the competition copies our product.
Yeah.
And when they copy our product, definitely, as I said, the industry is already very competitive. So
Yeah.
we are already selling a product at a very competitive price.
Yeah.
But if you are copying our product, then definitely you have to sell at least 5% to 10% cheaper than us.
Yeah.
So you are left with no margin,
Right.
right?
Yeah.
So this is a kind of scenario in our industry.
Yeah.
So people were copying our products. We were actually not really copying, but yeah, we were also developing products which were inspired by the competition.
Yeah.
So finally, but yeah, in last 5 years,
Mhm.
in 15-16, we developed a product which was totally different than the competition.
Mhm.
And we called it Link Twin ball pen.
Okay.
And the initial launch was really very good, and we also promoted it, on
Yeah.
mass media.
Yeah.
But somehow there was no repeat. So it really bombed for us. We
Okay.
made huge investments in that product,
Yeah.
but it really bombed.
Okay.
Then we were trying to look for another product.
Mhm.
So then we hired a top class designer in
Mhm.
Korea. So our molds are mostly from Korea, or
Okay.
I would say all molds are from Korea.
Okay.
So we hired a top class designer in Korea
Mhm.
to develop a new product for us.
Okay.
And the brief was that we want to develop a product which cannot be compared with any product in the world, not only in India, but in the world.
Okay.
So generally, what will happen if we want to develop a new product, we will give them a reference pen.
Yeah.
कि ये
Yeah.
competition पेन है, ये बहुत चलता है, हमको इसको
Yeah.
target
Yeah.
करना है.
Yeah. Yeah.
But in this case, we did not give any reference pen, and we said कि भाई ऐसा product बना के दो
Mhm.
कि जिसका वो कोई भी brand से world wide compare नहीं हो सके.
Mhm.
And then another brief was that the cost of the pen should be like a 5 rupee pen.
Okay.
But the perceived value should be like a 10 rupee pen.
Right. Right.
So these were the two briefs given to the designer, and designer came up with this Pentonic pen, so which was totally against the trend. So it was a big risk, I would say, that
Okay.
we were going against the trend, or I would say
Yeah.
that we broke all the myths in the industry.
Okay.
So you would see that most of the pens you would have used or you would see in the market they have a transparent barrel, a see-through barrel.
Yeah. Yeah.
Yeah, you can see the refill,
Yeah,
as you
yeah.
consume but our Pentonic was totally black, so it was totally
Yeah.
different.
Yeah.
Then
Yeah.
for a 10 rupee pen,
Mhm.
most of the pens had a metal clip.
Okay.
So metal clip, because it is a metal part, so it costs a lot. And there would be many features for a 10 rupee pen which are actually not really necessary for a
Yeah.
10 rupee pen.
Yeah.
So our Pentonic was totally dressed down. So there was no metal clip, there was no rubber grip, there was no film on the barrel.
Yeah.
So we saved considerable cost. In the cost, we saved a lot.
Yeah.
And then all the 10 rupee pens in the industry, they are individually packed, either on a paper box or on a OPP bag. So we decided to do away with that also, because we believe that a 10 rupee pen, a customer is buying for his own use and not for gifting.
Yeah.
So you don't need to really pack each pen individually.
Yeah. Yeah.
So as a result, we saved a lot of cost, and we were able to have a reasonable gross margins for us. So so this really worked for us. Despite initial resistance that we were going against the trend, but it worked for us, and then we increased our capacities considerably in a very short period.
Yeah.
And so we were able to feed the demand which was generated.
Yeah.
So more or less this is the story of last 10 years.
So I think the key is a little bit out of the box and trying to break the trend.
Yeah.
So Vinit's question was that why couldn't you do it in previous 10 years? So sometimes it's a timing, I don't know.
Yeah.
Because we were struggling to do something different.
Yeah. So, I've always seen, so I'm sorry to interrupt, I've always seen a few well-established companies. Lever had a decade of sleep. There was Procter & Gamble, which had 16 quarters of nowhere to go. And then suddenly the stock breaks out,
Right.
So what makes you believe that, this time it's different and you're going to hit the, the magic spot?
So, I think it's a kind of a cycle.
Yeah.
20 years back,
Yeah.
in 2 years' time, we doubled our turnover.
Yeah.
So that was a golden period for us, from a revenue of 58 crores.
Yeah.
From a revenue of 63 crores, we went to 120 crores in just 2 years.
Wow.
And then so we had, of course, breakthrough products in that period. And of course then we reached a revenue of 200 crores, which was kind of a dream milestone for us. So, and of course we had a lull period, as you know.
Yeah.
So similarly, I believe that now with the Pentonic actually working for us, and even the products which we are adding in the Pentonic portfolio, they all are luckily doing well. And of course, we've had a lot of learning in these 20 years. So we are able to really apply those whatever mistakes we made and whatever experience we learned. So we are able to apply those things, and of course we are taking certain risks also. And since we have good gross margins, in Pentonic portfolio, we are able to invest in activities like reach expansion, or having vector consultancy on board, which otherwise we would not been able to afford, pre-Pentonic.
Yeah.
So we are able to invest back, and so I would say that this is a period it's a period of digital transformation for us.
Okay.
Because reaching 5 lakh outlets would not be easy. Yeah.
So, what is your competitive landscape like? How much market share do you have? How much is the unorganized market? What is the size
So
of the market?
yeah. So of course, there are no official data available on
Yeah,
on these things, but the estimate is about 4,000 to 5,000 crores.
yeah,
Yeah, kind of a market size, out of which about 25% would be unorganized market.
okay,
So remaining 70-75% would be the organized sector, which
okay,
also is fragmented definitely. So there
yeah,
would be about 8 to 10 brands operating in this organized market. So
yeah,
some of them would be regional brands, some of would be national brands.
yeah.
And so we would have about I would say 8 to 10% market share.
Okay.
Yeah.
And which are the ones who are your big competitors? So there would be Sharp, there would be Pilot.
Yeah.
Which are your serious
So
competition in
so
terms
for
of
Link
brands?
and Pentonic, so for
Yeah,
Link and Pentonic brand, the competitors would be Cello
yeah,
and the Flare.
yeah.
So I would say these two national brands would be our competitors, but apart from that, there would be some regional brands also, which are competing in this space in the
Okay,
popular price, popular price point.
okay,
And when you speak about Pilot, so Pilot would not be actually directly competing with Link and Pentonic, but it would be competing with Uniball, which we are handling. You know, uh, Uniball is a Japanese brand, as you may know, and we are handling this. We are distributing Uniball in India
okay.
since last more than 20 years.
Yeah,
So Pilot and Uniball, they are competing with each other.
okay.
So yeah, so these are some of the uh, Sharp is I mean, it's not popular in India.
Okay. Uh, what is your Pentonic not getting copied? What do you think? Can you prevent from Pentonic from being getting copied?
Not really. So it's not that competition has not copied our product.
Yeah,
Pentonic has been copied from number 1 player to the number 10 player.
yeah,
So all of them, they have copied Pentonic.
yeah.
So, but I believe that Me Too products are seldom a success. So that is my belief, and that is what I have experienced in my lifetime. That if it is a Me Too product, the chances of being successful are very less. So I was happy that they were copying our product. Yeah. So we always have yeah, internal discussions. So my son, who is a third generation, he's also in the business now, and
Okay,
he's looking after exports.
okay,
So he always, tells me that Papa, we must take a legal action against these copycats.
yeah, yeah, yeah.
So I tell him, beta, there is no point wasting time on this because I'm not worried so long competition copies us.
Yeah.
I will get worried only if they try to innovate and produce products better than us.
Okay.
So that is why I believe that yeah, copy products are never successful, and none of the copy products they fared well,
Mhm.
and we are we are still gaining momentum for Pentonic.
In fact, Vineet, the good thing here is that since we came out with the first product of Pentonic, by the
Yeah.
time the competition is busy copying this product, we are ready with 2 more products.
Yes.
So the development cycle is now continuing.
Yes.
Okay.
Because we've decided to be innovative and we are not giving any reference point for our pens.
Correct. Right. That's great. That's great. So your 2 other products are in under development.
So we already have Pentonic ball pen, which is I would call it a classic Pentonic ball pen, which was the first one,
Yeah.
which is a 10 rupee ballpoint pen.
Yeah.
And then we soon after we launched a Pentonic gel pen, which was
Yeah.
also at 10 rupees.
Yeah.
After that, we launched a Pentonic retractable pen at 20 rupees,
Yeah.
which we call it a BRT. RT means retractable, B
Yeah.
for ball pen.
Right.
So these are already in the market.
Okay.
Then the fourth product which we are launching is a 30 rupees gel pen,
Okay.
retractable gel pen. So
Okay.
we are calling it GRT. RT means retractable, G means gel pen.
Yeah.
So that we are going to launch in April and May.
Okay.
And we've had very good review for this product.
Okay. Right. And so I'm likening your product to Maggie, So Maggie was a 10 rupee brand, always been there. And only recently they've struck out of that 10 rupee range, So do you see your 10 rupee pen now kind of move up the value chain because of the cost inflation and all that?
Yes, so that's why you see that the future products which we are investing in or launching or developing are not 10 rupee pens. They are 20 rupees and 30 rupees. So we are trying to go up the value chain because we know that a 10 rupee pen will not last very long. I mean, the gross margins will be always. The challenges will keep increasing in a 10 rupee product, with the rise in the RM costs, so our focus is to grow these 20 or 30 rupee pens.
Okay. So, coming to the raw material part of it, your primary cost would be plastic and ink, right? And
our cost would be plastic and ink and ball pen tip.
Pardon?
And the tip.
And the tip, right? So typically, how does the cost structure work for these three parts in the raw material part of it?
So for a Pentonic, the total RM cost would be actually I would say that just a minute, about 50% would be the RM cost for a Pentonic,
Okay.
While for the legacy products, it would be more than 60%.
Okay, so that is a major shift.
Yeah, that's a major shift. Yeah.
And so what are your, so the ink is typically is crude only carbon black based, right?
Sorry?
The ink is manufactured from carbon black.
I'm not aware of this.
Okay.
So, we are of course sourcing ink from.
No, sir, I don't think ink is from carbon black. It is a water-based ink. So
Okay.
And oil-based ink. So it is not. Maybe some portion may be coming from very small portion will be from carbon black.
Okay. So are the ink prices highly fluctuating?
Not really, but in the last 2 years, everything is fluctuating.
Of course.
Whether it is ink, whether it is a tip, whether it is plastic. But otherwise, relatively, ink prices have been quite stable.
Right. And and what do you say would be your contribution margins now or gross margins?
Gross margin on the link product is upwards of 40% and average is now 26%.
Yeah. So of course, link margins are actually less than 25%.
Correct.
Yeah.
The legacy products. I'm saying the legacy products.
Yeah.
And while Pentonic margins are about 40%, plus minus little bit.
Okay.
Before these price increase, the RM price increases,
Yeah.
it was comfortably more than 40%.
Correct.
even at 50% at some point of time.
Yeah.
But today, after the cost increase, it's around 40%, you know.
Okay. And your breakup is it be fair to say 95/5 is your breakup right now between Pentonic and the legacy products?
No.
No,
Pentonic is 26% now.
Pentonic
Okay.
is about 30%.
Now 30, yeah.
About 1/3 is
Yeah, yeah.
Pentonic and
Okay.
2/3 is legacy products.
Yeah.
In terms of volume, I'm saying, yeah.
Yeah. And in terms of value,
So the value would be almost 50%.
50% is Pentonic.
Almost 50%, yeah.
So that's a very rapid
Yes.
growth in the last 2 years.
Yeah, so all our energies are going to grow, growing Pentonic.
Okay. And would you be able to share quarterly data for this breakup between Pentonic and legacy going ahead or historically?
Sorry, the Pentonic would be not 50%. It would be about 30-35%. The value.
Okay.
Value.
So when do you expect your portfolio to move to? So in 3 to 5 years, what would be your portfolio like?
So of course, this year will definitely cross the Pentonic volume. Sorry, the Pentonic contribution, value contribution will be more than 50% in this coming financial year.
Okay. And and what are your aspirations? When do you plan to move to 100% or phase out your legacy products or
whatever? Some of the legacy products have good market share.
Okay.
And with the backing of Pentonic,
Yeah.
we are daring to increase the prices. I mean, passing
Yeah.
the cost increase to the trade.
Yeah.
So that is something we are trying to do, and we hope that if let's say if we are able to increase our gross margins in the legacy products, with the support of Pentonic, we will still have some contribution of Link, in next, next couple of years.
Yeah, because it will also cater to a particular section of the market.
I understand.
Want to be absent from, right?
Yeah. So, but your Pentonic is growing very fast, right?
Yeah.
When did you launch Pentonic? 2020, right?
No, so we launched it in 18-19, financial year 18-19.
Yeah.
At the beginning of 18-19.
So in 4 years, in 3 years, we moved very fast on that.
Yeah, definitely. Yes. Yeah.
So now the portfolio growth would come. So Pentonic in 3 years would be, in terms of value sales, how much would you think it would be at?
So as I said, that this year we will definitely, Pentonic would definitely be 100 crore brand.
Okay.
For us.
Okay.
So, and as I said, all our investments are going in, increasing the Pentonic portfolio.
Right. And so what are our EBITDA margins right now?
So EBITDA margins, of course, pre-pandemic, so 1920 was about 10%, 9.5 or something.
Yeah.
Yeah. And so definitely with Pentonic growing, you can expect minimum, we are aiming at minimum 12% EBITDA,
Okay.
going forward. That is the minimum we are aiming at.
Yeah. So you had mentioned that this quarter is volume-wise the best, but maybe not be in terms of profitability. So where do you expect your margins to be in this quarter?
I'm not sure. This quarter, maybe challenging, as I said. So it could be sub 10%.
Okay.
Yeah, but still, it should not be really very bad. But once the raw material prices stabilize, definitely, we can start marching towards, what we are aiming at.
Yeah. And just going below EBITDA, what is the debt on our books?
What? Okay, so for that, Mr. Dujari, our CFO, he would
Yeah, yeah.
answer this. Pujari ji?
Yeah, sir, as far as debt is concerned, we started with a debt of around 40 crore, 46 crore at the beginning of year 2021. FY21 is we started with a debt of 46 crore,
Yeah.
and currently our debt will be almost zero.
Super.
So it will be hardly 2-3 crore of debt right now.
Yeah. And on the working, and what is the working capital cycle like?
Working capital cycle, the debtors are around 30 to 35 days,
Yeah.
and the inventory will be around 65 to 70 days.
Okay. And in terms of credit period, what is it?
Credit period normally, you are talking about creditors, no?
Debtors.
Debtors in general trade, we operate on cash and carry model, and for exports we extend the selling period is the credit period to the customer.
Yeah.
And for modern trade, it varies from 60 to 120 days.
Okay. Okay. So you have a negative working capital cycle. Would it be fair to say that? Almost.
Not exactly negative, because we credit at the creditor front, we have some challenge in the sense that most of the granule purchase is on advance terms.
Okay. Okay.
With Reliance, Haldia, Indian Oil, whatever we procure, we pay in advance.
Okay.
For other material, we do get a credit, but we like to opt for the cash discount. So
Yeah.
make the cost cost efficient.
Yeah. And what is your current capacity, and how you see your capacity utilization move going ahead?
So,
I think-
yeah, so far capacities are concerned, of course, we are today able to produce about, I would say 10 crore pens in a month. So our
Okay.
capacity is about 120 crores a pen, 120 crore pens.
Yeah.
And currently, and of course, this capacity is our in-house capacity combined with our outsourced capacity.
Okay.
So we also have some outsourcing.
Yeah. So you're not
so,
limited by capacity, your own capacity. You can always outsource.
Yeah, right. So we have a good flexibility, I would say.
Okay. Okay. So are you planning any capex going ahead?
So the capex are, there is no extraordinary capex. We haven't planned any extraordinary capex for the coming financial year.
Yeah.
So it would be in the tune of about 10 to. Dujari ji, कितना हम लोगों ने plan किया capex का ये साल?
Sir, we have planned for around 12 crore, and
Okay.
plus we will maybe investing in a new plot of land adjacent to our factory in Amargaon.
Okay.
For future expansion.
Yeah.
So
So
that
what
is
is?
that is in
that's-
addition to 12 crores, right?
Yeah. So that would be how much, that plot of land?
I think altogether we should be around 15 crore for this year.
Okay. Okay. And coming back to your main business, so we've discussed pens. The other is our the stationery business. So ITC is a serious player out here, and old
Right.
players like Navneet have not been able to really make headway out here. So how are you? I know you signed up with Delhi and you're doing the marketing. So how do the pricing of Delhi and ITC compare?
Okay. So first of all, ITC is primarily in the notebook business.
Yeah.
So their 90% revenue is coming from notebooks,
Yeah.
while the other 10% is coming from some stationery products like writing instruments. Then they have that mathematical instruments.
Yeah.
So they have not really many stationery products.
Yeah.
So Delhi and ITC are totally different range altogether, because in Delhi we do not have notebooks.
Okay.
So the products which we deal in under Delhi brand, like calculators, scissors, there are a host of stationery products.
Okay. 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 Okay.
Which ITC is not really dealing
Okay,
in.
okay. We are dealing in non-paper products.
Right. And Navneet is also again, Navneet is more in publishing business
Yeah.
and notebooks. So which is also very competitive. So
And
we are
who's a
not
local
in.
competitor to Delhi out here?
So Delhi, of course, we have your local competitors. Yeah. So, for example, calculators, our
Casio.
competition is with Casio,
Yeah.
yeah, which is a foreign brand, and then we have competition with Orpet, which is a local brand.
Yeah.
So we are actually positioned ourselves between Casio and Orpet.
Okay. And
So,
how you see this business grow going ahead?
So, so far Delhi is concerned, when we took over pre-COVID, the business was, less than 10 crores annually.
Yeah.
So, and we are looking at least 50 crores in in the coming financial year.
Okay.
So,
And
of course, 2 years have been challenging.
yeah.
So we want to take a jump because we believe that Delhi has a potential, of a business which could be more than Link, actually.
Okay. And what are the margins that we earn out here? Because you're primarily
And the
doing
margins
distribution.
for us are, so it's basically trading for us. So we have about 20% gross margins.
Okay.
Yeah.
And
And
at the EBITDA level, how much do you get?
I have not
Okay.
really looked into that.
And generally, how much money do we invest in Delhi products?
So Delhi, so we get a credit of about 3 months
Okay.
from the supplier.
Wow.
Delhi,
Yeah.
3 months का credit है ना, if you know.
Okay. And what is the size of the market? तो तीन ही player है ना? It's a
Very big market.
So stationery, of course, right now I'm not able to quote the stationery market. आपका पास है क्या?
It must, but it's at least 3 to 4 times the pen market.
No, it is much more than that.
than
Yeah, much more
Okay,
than that. I don't have the exact data.
Okay.
We will be having some data.
Okay.
Soon.
Yeah.
But
Okay.
globally, I can tell you, I mean, the market of stationery is like multiple times the pen because pen is a subsegment.
Single
of
product.
stationery.
Yeah. That has got multiple products. So apart from calculators, scissors, and maybe staplers and all that, what are the other products? Just to know how what are
we have magnifier glass, we have adhesives,
Okay.
we have desk organizers,
Okay.
and
Paper clips, you know?
Sir,
Yeah,
there
we
will be
have
files
those.
and folders,
Yeah.
Binder clips.
and arch files.
Okay.
It's a large range.
Yeah.
So
And
2.5 kilo catalog of
okay. Wow. So you have a huge catalog of products to sell.
Yeah.
Okay. And how you see on a 3 to 5 year basis, what do you think would be your revenue? So you said you do about 800 crores, right? On a 5-year basis. And how much of it will be from Delhi?
So I think by the time we reach 800 crores, Delhi should have at least about 15 to 20% market, 15 to 20% share
of your business coming from there. Okay.
Yeah, right.
Okay. So that's a fairly good run rate. And
Right.
So how are you seeing your earnings, net PAT grow over the next few years?
So, Dujari, would you like to comment? Dujari, you are muted.
So I'll just come there, Vineet, just to tell you
Yeah.
that we are looking at a minimum EBITDA margin of about 12% on a top line of 800%. Let's say 5 years now.
That's the
Yeah.
minimum.
That's the minimum. And then the rest of the overheads are not going to grow significantly.
Yeah.
Yeah.
So I think mathematically, the growth will be significantly high. The
Okay.
CAGR.
So in
You can
yeah,
do yourself
so,
do that maths.
yeah. So in terms of your costs, other than raw material costs, what are your principal costs that are involved?
So factory overheads, labor.
Yeah. Okay. And will you need to add what is your workforce like?
So workforce right now, altogether, we would have, you know, about 1,000 people on payroll,
Okay.
and there would be, some workers,
Yeah.
which
Temp.
would be another
temp.
1,000
Also.
on contract.
Okay. And typically, how do you, what is your company policy on remuneration? So does it go up 5-10% every year, or how does it grow?
So typically, on average, about 10%, I would say.
Okay.
8 to, or you can call it 8 to 12%.
Okay. And
But
yeah, understood. And where do you see your workforce 5 years down the line?
frankly speaking, the manpower costs in the coming year are going to shoot up
Yeah.
a little bit, and
Yeah.
then probably settle down. And the
Okay.
reason is that until now, our focus was mostly on the general trade.
Yeah.
So, but during COVID, we realized that, and of course, that e-com has substantial potential. I mean, a great potential. So, we have divided our sales channels, between general trade, then modern trade, then e-commerce, and then there is a corporate and institutional sales.
Yeah.
And of course, exports. So these are the 5 different verticals. We have broken our sales channels. So until now, we had only like 2 people heading exports was headed by somebody, and sales was headed by somebody who would the largely focus would be on general trade. But
Yeah.
from this year, we are having separate heads for each channel. So it would be quite a quite an investment in the manpower.
Okay.
So we have already hired a senior person for modern trade, because we are looking at a huge growth in modern trade channel. So this is about it. So
currently, how, as a percentage of revenue, where will your this year's wage cost be, or sales, salary, remuneration?
Salary and wages. Salary and wages.
Salary and wages. Yeah.
Pujariji, can you comment on this? What are you looking at in this quarter or the? Pujariji, आप unmute कीजिए अपने आप को. Pujariji, yeah.
This quarter will not be much of an impact, because most of the people have joined from February or mostly March.
Yeah.
So this quarter will be more or less replica of last quarter.
Yeah.
Maybe 0.5 or 1% up, but the effect will be from next financial year.
Okay.
So अभी अपना इस quarter में approximately कितना manpower cost आएगा पुजारी जी? But about 4%, 5%.
Like last quarter, we had 1168 lakhs as the manpower cost.
Okay.
So this quarter it should be within 1200.
No,
Okay.
so as a percentage, I think.
Fine, we'll check it out.
As a percentage, it will be around 12%.
Okay. And where do you see it go next year, and where do you finally see it set? So where it will be next year? That's all.
In terms of percentage, it should come down, because the turnover is expected to go up, and but overall quantum will be higher.
Yeah.
So 10% is the normal increase, and over that, I think another 10-15% increase will be there. Maximum.
Yeah. Okay. And just I would like to spend the last 5 minutes in understanding your the new channels that have opened up. So institutional trade, uh, your modern trade and e-commerce. So
Yeah,
if you can throw a little bit of light on these, what is your strategy out here? And
certainly.
what you see as a contribution of your sales coming from these outlets.
All right. So currently our business from e-com is, I would say, quite negligible. It won't be more than 5% of our general
Okay.
trade sales.
Yeah.
So our aim is for going forward, it should be anything between 15 or say ideally at least 15%.
Okay.
So this is what we are looking at, the contribution from e-com.
Yeah.
And so we definitely really need to work very hard on this.
Yeah. Yeah.
And we are still, scouting for the e-com head. So this position needs to be filled very soon. Then coming to modern trade, again, we are aiming at minimum 15% contribution of the modern trade in our, overall domestic sales.
Yeah.
And we've already hired, we already have on board the head for MP.
Okay.
And so that is about these two channels. Then institutional and corporate sales, actually, we are still not present in CSD.
Okay.
That.
Yeah.
So we are at a very advanced stage, in that channel. So so once that starts, I believe that it will happen very soon. So I think that should help us increase our contribution from corporate and institutional sales.
Okay. I think it's been very instructive and learning. We got to learn a new industry today, and thanks to you. Jimmy, do you have any questions, maintenance questions to take up?
No, sir. Major question are answered by them.
Okay. So I think Udit ji, Kumar, and Dujari ji, thank you for spending time with us, and we will build a note next week, and we will share it with you for your comments before we publish it to the market.
Right. Thank you, Vinit. You based out of Bombay, right?
Yeah, we are based out of Bombay.
So whenever you have time, we would like to invite you to visit our Gujarat facilities.
Okay.
It's just about 3 hours drive from Bombay. Actually, 2 hours drive from my home in Bombay, but
okay. So you are at Vapi. Are you at Vapi?
So we are before Vapi. We are in Umargam.
Okay. So Jimit is from Baroda, right?
Oh,
Jimit?
okay.
Sorry, Jimit is from Surat.
So it is halfway, from.
Yeah.
It's an equidistance, if I.
Yeah.
Travel from Surat airport to Umargam and Bombay airport to Umargam is equidistance actually. Yeah.
Right. Okay. Would it be possible for you to share with us your vector report?
Our vector
report on the size of the market and whatever they've done consulting kind of insights. Okay, I know it might be confidential. You may not want to share it, but I'm just asking.
No, it's not confidential as such. I have to ask them, for some such report because I don't have any such report from them yet.
Okay.
What we can do, we are getting a report of Euromonitor, so maybe if we find it useful, we may share with you.
Yeah, that would be great.
We are getting it today.
An idea, when we are writing about the market, we'll get a better understanding of how the market is looking globally and what are the trends and stuff. And finally, one last thing, how you see the export opportunity unfold?
So exports, definitely, we are very bullish about exports because You know, Pentonic is also doing well in several countries.
Yeah.
And you know, pre-COVID, our exports was about 80 crores.
Yeah.
And we are targeting more than 100 crores in the coming financial year.
Okay.
So, yeah, we are quite optimistic or quite bullish about exports also.
Okay. Okay. That's great. Thank you for your time, Udit, and we will get back to you if we have any further queries on, when we are building the model and etc.
Sure, Vinny. Thank you very
And,
much.
Thanks a lot,
yeah.
Thanks for the time. Really appreciate your time.
Yeah, and just if you can share the Euro monitor, whatever insights you can share
We
with
will
us.
share it once we get it.
Yeah, as soon as we have.
Yeah,
Because
yeah,
we
sure,
have-
sure. Yes, yes. Okay. Thank you very much and have a good day, everybody.
Yeah, you too.
Thank you,
Yeah.
thank you.
Have a good day.
Thank you very much.